5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Pharma, the best trade idea resource out there.
What is up, Zinger Nation? Happy Friday, everyone. It's your boy, producer AB here. Let me know what everyone's looking at today. I'm starting off today looking at Tesla. We just hit new intraday highs. Let me get over to the 2-day chart. We're up here at 692 about. It's come down a little bit from there. But I'm not in this trade right now. But if it hits 700, if Tesla goes to 700, I think we will have a ways to go up from there, maybe around the 710, 720 level. But let me know what you're looking at in the chat. Would love to check out some stocks from Zinger Nation. We do have some members of Zinger Nation hopping on with us later in the show. So if that's something you'd be interested in doing, is hopping on and talking with us, let me know. I see Jameson in the chat, Mr. Nomadic. Let me know if you want to hop on with us around 1 p.m. Would love to have y'all. Let me check out pins for Matthew Cole real quick. Pinterest had some not so great earnings yesterday afternoon, and we saw the stock drop from about $75 down all the way to, this level at 62, and then the stock continued to drop from there. So right now we're looking at, let's go to the daily over here. Yeah, I mean, I don't know about this right now. I mean, because we can see if we zoom out that it's just in this. I mean, it dropped a lot, then recovered, and now it's dropping again. So if it holds this level, then we could be setting up for a nice little trade back up. But I'm going to wait to see if this trades sideways for a minute to see if it consolidates at all before I get into Pinterest. And honestly, from a business perspective, like outside of just the chart and trading, I've never personally used Pinterest. I know a lot of people do, but I feel like I've been hearing less and less about it. At the peak of the pandemic, a lot of people were going to Pinterest for, cooking ideas, decoration ideas, things like that. But I haven't heard much about it recently. Let's see, in the chat, we got Matthew Cole saying it's way undersold. And yeah, I mean, that's what happens is when these stocks report bad earnings and there's a huge sell-off, they'll get oversold. And then they get bought back again and it'll come back up. And then, if it gets too overextended, it'll be overbought. But yeah, I mean, I personally, I wouldn't mind because we can see it at this previous support level down here. But if we see it consolidate at all, we see any bit of a sideways, then that could be a sign for me to get in. But right now, I'm going to wait to see if this continues to drop from here. If it blows through the support level, that would be trouble for me. So I'm going to wait. I'm going to stay on the sideline of this one. We do have one support level back here last November, again in May, back here now. So I think this will be a kind of a telltale sign. Are we going to bounce from here, or is it going to continue to drop below this support level? Henry Hayes, what's up, man? If you guys want to hop on with us for a little Zinger Nation hangout, drop a 1 in the chat and I'll get that link over to you. Who here's from the Well Squad? Well Squad in the house. So just a preview of today. We do have a couple interviews coming up. We have the Lantern Pharma CEO, Panna Sharma, coming on. So it's a very interesting kind of genomics AI play. So we're going to talk to the CEO more about the company, learn some more about what's going on in the genomics AI space. After that, we have, guess what? We have the Wall Street Bets founder coming on, the man himself who founded Wall Street Bets coming on. His name is Jaime. Going to be a very interesting conversation. Excited about that. But let me know in the chat what we're looking at today, what I should check out. I placed a trade on Baba earlier with Spencer. I don't know if y'all were there, but yeah, we've got exciting show today. Jaime Rogozinski, little Polish name, having a little trouble with it. Rogozinski, we'll learn how to say it with him. But yeah, let me check on Baba real quick because I do have an open trade on that. We'll talk about the trade that I placed on it. We'll talk about what I'm looking for. So yeah, here, let's go over to the 2-day chart. So I saw some strength right here in Baba in the chart, coming up here. And I know there's a lot of risk involved. We've got earnings coming out next Tuesday, a lot of fear in all these Chinese stocks. We'll check in on some other Chinese stocks. But my thesis was, hey, it could continue this uptrend and go up to 200. And if we hit 200, I think it'll fly from there. So I've opened $200 calls that expire next Friday, kind of as an earnings play. But hey, if next Monday the stock opens up again and I have a nice little return on those options, I'll get out of them before the earnings. So no need to stick around through the earnings if I've already made a profit. But if they have not risen to the spot, if the shares of Baba have not risen to the spot that I like them at, then I will continue to hold through earnings and just hope for good earnings. And if the earnings are bad, then hey, I'm out $250 or whatever I bought the contract for, which I knew was a possibility when I bought the contract. So that's what I want to, I want to talk about that a little bit with the options trading, because I was getting some flack about my system, which was kind of YOLOing some options. And at the end of the day, look, I invest long term, but just on the side, I like to play a little of these option plays, and they're just for fun. I mentioned it earlier that I will not place any of these options trades that I don't mind losing all the capital in. So again, it's not something that I would recommend doing if you're trading with money, that you need, or that you're trying to just use your money to accrue some extra income. Not a great way to do that. But if you're like me and you get a little itch to just kind of YOLO gamble some stuff in the market, then that's how I kind of play those options. Let's see in the chat what else we got looking at. Sofi. Let's check out Sofi. So Sofi actually saw a nice little bounce when Robinhood IPO'd. Was that yesterday or the day before now? I think it was yesterday. But Sofi, I mean, I like long term. So this is one that it hasn't been on the market for that long yet. Let's see when we started trading in here. About November of last year, we started trading in Sofi. So for this one, I like it more of a long-term investment as opposed to a trade. Obviously, if you know kind of what the stock, if you know the nature of the stock, how it behaves, and you can start trading in and out of it. We had a kind of a sustained downtrend here from late June to mid-July, where almost every single day we see a red candle, and now we're seeing it kind of consolidate down here a little bit. So if we see this rounding bottom continue to create a strong base, and then we see a little bit of a move up, then I definitely like that as a trade, and we can get back up to this $23, $24 level. It will all be about, can we sustain this level right here? We can see the previous support back here in May, again in April. So right now, I mean, this looks like a good spot. I personally would like to wait to see if we can't see like a couple, maybe like 2 green candles in a row would give me some more conviction saying, okay, this is coming back up. But until then, I'm okay just hanging out on the sideline on this one. But again, I do like the company long term. So let's see. Sunday saying Baba would be a good long play when weekly opens up and take 101. What else is everyone looking at? Tiny Pie saying short GME, short AMC, long hood. I don't know if I'm with you there, bro. Let's check out hood. Let's see how hood's doing. All right. I mean, look. Well, let's get off this chart because we don't need the dailies on a chart that's 2 days old. I'm on the sideline on this one as well. But look, we see this nice little green candle coming in here. So it looks like it got to a point where buyers started to like it. I don't mind it right now if you want to buy a little bit as a long-term investment. But I think, Spencer and I have talked about it before, that IPOs typically would like to wait a few months, because most of the times IPOs will end up trading lower than they come in at within the first few months after opening. Let's see. Sunday wants us to check out Cleveland Cliffs, ticker CLF. Let's go over there. Cleveland Cliffs. So this has been a good metals play, I believe. Let's see what it actually says the companies do. What the company does. Do we not have I guess we don't have an overview for this company. But I think Cleveland Cliffs is a metal play. I've been in it a couple times as a trade, but not recently. Let's go back to the dailies. Let's get a little more extended look on this. Oh, wow. Yeah. We can definitely see some strength there. Is this all-time highs for Cleveland Cliffs? Oh no, if we go all the way back to 2014, looks like we had some more trading volume over here. But right now, I mean, look, I mean, we can see this uptrend from $17 up to 25. Since I'm out of this now, I'm not going to get in right now, right here. But if we dip again, but the trend looks like it's continuing, it's trading in this channel, then hey, I don't mind it. I don't mind it one bit. But let me know the thesis behind that someday in the chat. Is this a reopening play? What kind of play is this? Oldest steel mill in the country, got it. It is at all-time highs, got it. Materials. Let's see. Can you please look at any Gryphon Digital Mining? They are 100% renewable. All right, let's check this out. Not familiar with the company, but we can certainly look at the chart. Sphere 3D Corp. All right, let's go over here to overview. Sphere 3D Corp delivers virtualization technology and data management solution and operates in one segment, which is providing data management and desktop and application virtualization solutions for small and medium businesses and distributed enterprises. The company's portfolio includes, okay, so I think I would need to do a little bit more research into what this company does to understand it a little bit better. But let's check out how the chart's looking. Okay, so we can see back in the, wow, if we go back, it was, I mean, it's got to have some like reverse splits here or something, because if we go back here, it says the shares were all the way at $1,000. Stock hasn't done much, it looks like, for a while, but it's a cheaper stock, only $3. We're starting to see a little uptrend here. Yeah, I mean, let me know how you're trading this in the chat. Let's see who said this. Prasanth, let me know how you're trading any in the chat. Are you looking at it more of a swing trade or buy and hold? I'd like to know your kind of time horizon on that. Let's check out Amazon. So Amazon reported not so great earnings yesterday afternoon. The stock opened down about 7%, which is the most that I've seen Amazon drop recently. And I think with Amazon, essentially with any big dips like this, you can feel safe buying. I mean, if we go back here to this was the COVID crash. This was the last time the stock went down a decent amount. Right here, it went down to back in last September when we saw tech get some weakness. But I think depending on how long you're looking at it, like if you buy right here on this dip and you just hold for a year or 2 years, you'll be fine. I do think we could see some more weakness in the short term, maybe coming down to this support level at right around $3,000. The stock's trading at 3,300, about 3,360 bucks right now. So it could drop a couple more hundred down to that $3,000 level. But hey, I mean, Amazon is one of, if not the strongest company in the country, in the world. And I believe it will continue to be. So I don't mind just buying dips on this stock if you're looking at it long term. How far do you think Nikola will fall based on the news? So look, let's talk some Nikola real quick. We just saw the former CEO and founder Trevor Milton indicted on charges. I mean, the question is like how much further can this fall, right? Because if we go back here to last March, it was about the $14 range. We saw it run all the way up with the other EVs up to like 80 bucks, hung around there for a few weeks, then came back down, or maybe just a week or so, hung around here, the $70 range, came crashing down. Chart's ugly, but like anything, an ugly stock, a bad company will get to a point where it's so cheap that even at low levels, it will become a good enough spot to buy. I don't know if we're there yet with Nikola. I mean, if we look just right here, going back to late last month, June, we were at 18 bucks. We've had some bad news there, but the stock's just been trading down, basically a falling knife for a whole month. And again, like I said with some other stocks we've talked about today, if it starts consolidating here and trades sideways and holds this $12, $11 level, then that could be an indicator to get back in. I mean, this could be a sneaky long play because I do think the company has some technology that is, applicable and good. But from an overall standpoint, the company has historically been shitty, and I don't like to invest in shitty companies. So I need to see some turnaround, not only in the company, but also in the stock before I think, all right, this is a good buying opportunity. Let's continue down the chat. Okay, we're getting some more hood. All right, let's check out Chewy. Chewy, which is of course the biggest e-commerce site for food, pet supplies, pet food, dog food, cat food. Yeah, it's holding support here. We've seen the previous support levels, but look, I mean, what about this chart? I guess right here, maybe if you were in since last May, you see this uptrend, and it's kind of trading in this channel right here. Then I don't hate it, but I don't know if I want to get into this company right now. Let's see kind of if we have any news on it. Let's go to Benzinga Pro. Let's see. This was from yesterday. Some unusual options activity. Oh yeah, we're seeing some puts coming in at 86.50. What's the current? We're at 84. So there's some big players betting on Chewy to go down in the short term. I'm not really seeing anything in the chart that's indicating to me like, oh, this is a great time to hop in. But I will say if we continue trading in this channel and it looks like we can get back to this $100 level, then that could be an interesting trade. I'm not in it now. I've actually never traded Chewy before, but I mean, look, there's so many companies that dropped with the COVID crash that arguably shouldn't have dropped at all. And Chewy is one of them, because think about it. If you have pets and COVID hits and you don't want to go to the store as much, you want to stay at home, then people are going to be using more Chewy. I mean, there were stocks that dropped that shouldn't have in retrospect, but this is one that I'm surprised dropped this much, went all the way down to around $20 flat last March and is up to, what did we say was that, $80 now? 84. So, I mean, that's great returns if you just bought Chewy last March, but there's a lot of stocks that would have given you great returns. Nvidia has been trading sideways for a while, GD saying. So Nvidia was trading sideways for like a whole year. Like we go back to last September and it was really just staying in this range. So I'll show you what I'm talking about right here. And I mean, I like this a lot. I've said it before. I'll say it again, that anytime a stock is trading sideways, it's not giving up any gains. That's like usually a good sign to buy, not foolproof 100%. But if we go back to last September, the stock was at 145. This is obviously split adjusted. So back then it was at 650 or whatever it was. And around 600, I should say. And so from September all the way to this February, so about 6 months, it just traded in this range of 117 to 150, and it didn't do anything. And then we saw a big dip. This was kind of spurred by some chip shortages, some scares in the supply chain. So the stock dipped down actually below that support level that we had back there. And then we saw some buying come back in. And so the buying brought us to new all-time highs at the time, another small dip followed by a bigger rip. So we've talked about this before, that, a lot of times when a stock is on an uptrend, nothing will go straight up. So we'll see a little bit of a dip followed by a bigger rip. So a little dip, bigger rip. So we saw that here, little dip, then a bigger rip, and then we saw another little dip, and we haven't gotten that bigger rip yet. So it has been trading sideways for the past week or so. And yeah, if we see it, so a couple things. If it comes down to this support level of 180, 179, then it's an easy buy. I think if it dips down to here, hits this support level, then we'll see it come back up to this level at 195. You can trade that for a few bucks, $15 from 180 to 195. Or we could see it trading sideways in this range for a few more days, a week or so, and then that could be that bigger rip that we're looking for following this dip. I love NVIDIA. It's one of my favorite long-term companies. It's in my IRA. Trading it is hard because the stock sometimes has a mind of its own, and options are just so expensive on it. So I don't a lot of times trade options on NVIDIA just because it's so expensive, but one of my favorite stocks. Sunday's asking, why is it a good time to buy a stock going sideways? Check out the higher T frames because what's happening in stock, you'll be chopped up, motherboard issues. The reason that I like finding stocks that are trading sideways is because a lot of times that's showing consolidation. That's showing at the current share price that volume isn't dropping, and that we can see a broad base forming. And if it's a good company, if it's a good stock, then usually that consolidation phase is followed by a leg up. A lot of times that consolidation phase, we can see it right here. Look, so it's trading sideways, then it comes up. So if you're looking for a trade, you see it, it comes up, you get out of the trade, and then it can come crashing back down. There are other stocks that have more of a sustained uptrend and not necessarily, any consolidation, any trading sideways periods. So this is one that I'm on the daily chart right here. So we can go back to last November. So for almost a full year, this stock has just been ripping straight up. This is Fortinet, ticker FTNT. It's a cybersecurity play. And I mean, besides this candle right here, what's going on here? We're at 268. I don't know why this is showing all the way down here. I don't think the stock really got all the way down to $250. But anyway, we've seen some red candles here. But this one, Sunday, as you can see, there's no real consolidation. It's just been going straight up. I mean, the trend is your friend. I'd rather be getting into a positive trend than trying to catch a bottom like right back here. If we go back here, this is so hard to time. I mean, no one in the world can time markets perfectly. So when a stock's dropping, you can try to catch the bottom. If you do, great. But more times than not, you can see this right here and think like, okay, this is the bottom right here. And then you get in right here and the stock drops another $10. So I'd rather look at the trends. And yeah, I mean, I want to see the trading sideways. I want to see the consolidation. I want to see it as part of a bigger upward trend. I don't want to see it just stagnant for a while. I mean, Apple was like Nvidia kind of trading sideways for the better part of a year, and we didn't see it do anything. So again, this is the daily. So if we go back to last September, it was at 136 and then it dropped and it traded kind of in this range for 6 months or so. And it didn't really do anything, dropped again down to this $120 level. And then we finally saw it break through this resistance level at 143, hit all-time highs a few weeks ago. And now we're seeing it dip again. So again, if we see it consolidate, good time for me to hop in. I'm not going to hop into anything that's just dropping really fast. Are we talking strictly day trades? Not necessarily. No, I mean, look, I mostly swing trade with options, and I'm looking like 2 weeks out. I'm not necessarily getting into stocks day in and day out. I'm looking at the dailies right now on most of the charts. So each one of these candles is a full day. So it gives us more of like an overview of what the stock's been doing over a 3-6 month period, even year-long period. We can go back to last July right here and see what Apple's been doing the past year. But if you were trading just strictly day trades, I would be more looking at the 15-minute chart, seeing what the stocks are doing intraday, what they're doing in the middle of the day, and then you can go off those charts. But honestly, I don't day trade that often as far as getting in and out of positions in the same day. So let me know in the chat what stocks we should check out. It is time for our first interview. Super excited about this. Lantern Pharma, exciting company in the genomics AI space, AI genomics machine learning. Super exciting company, very interesting as far as innovation, what the company's doing. Excited to bring the CEO and talk more about that. So without further ado, let's get to the first interview. Mr. Sharma, welcome to the Benzinga Power Hour.
Oh, thanks. Thanks for having me on.
Yeah, thank you for taking time out of your busy Friday to join us today.
Well, thanks for giving me some time. We got a lot of exciting stuff going on. We reported earnings yesterday after market, so there's a lot of excitement about what we're doing.
Yeah, definitely. Real quick before we get into the earnings, do you just want to give our audience a little bit of background about the company, kind of what y'all are doing?
Absolutely, yeah. We're a clinical stage biotech company. So like many other biotechs, we're developing drugs that we believe have the chance to totally change the outcome in cancer patients. We're entirely focused on cancer, but we have a unique position in that we're using AI and machine learning to develop the drugs. And so what can take 8 to 10 years for us can take 3 to 5 years. What takes $1 billion for biotech or pharma, we think for us can take 10 to 25 million. So we're taking huge zeros off the timeline and the cost of developing drugs by doing what makes most sense. We're modeling disease and understanding pathways, and we're doing it because all of this is data enabled. And we're sitting on so much data in cancer today. And so we're leveraging that to make drugs more precise, faster, cheaper, and to try to bring these medicines to the people who need it the most, which are cancer patients.
Got it. So are there any interesting partnerships with other kind of biotech companies that are doing similar things, or how does that work?
We are exploring partnerships with bigger biotech and pharma companies, but most of our pipeline, which you have there on that slide, is our own. We actually bought back one of our drugs that the company, the former management, had out-licensed, and they out-licensed to a partner that didn't do much with the drug, and so it was time to take it back. And we're actually pretty excited to take it back. It gives us access to another $700-800 million market globally in metastatic prostate cancer. And that drug has enrolled about a third of the patients in the trial. It's in a phase 2 trial today. And that drug was rescued by using genomics and machine learning. So that drug was abandoned by Eisai years ago. And then the prior management said, wow, this drug really works, but no one knows exactly where to point this drug. So they used genomics and machine learning to figure out, okay, this is the right cancer, these are the right patients. And in fact, in those patients, they've actually had some very superior overall survival, about 12 and a half months in the first set of patients. And that's much more improved than the current standard of care for metastatic prostate cancer. We've got about 80 million on our balance sheet. Our burn rate historically has been about a little less than 10 million a year. That'll increase as we get into trials. So we've got years of cash in front of us, at least 4 plus 5 years of cash. And so we've got a lot of milestones that we'll be hitting over the next few years. And as I mentioned, any one of our drugs can be worth hundreds of millions or billions. And that's really a big upside. So that's today we're trading about 2 times our cash position or slightly above that, which is dirt cheap for a biotech.
Yeah, I mean, definitely some interesting financials there. So now that we got a little bit of background on the company and what y'all are doing, let's get into the earnings that y'all reported this week.
Absolutely. So we spent about 2.4 million this past quarter, a little less than analysts had expected, but it reflects some of the challenges in manufacturing that we had. And we ended the quarter with 79.6 on our balance sheet. And as I mentioned, our burn rate will increase. It'll be closer to 3.5, 4 probably in Q3, and closer to 4.5, 5 as we ramp up our clinical trial. We have a major trial starting, a phase 2 in never smokers. And these are never smokers who have non-small cell lung cancer. And ironically, never smokers actually have a worse outcome when they don't respond to drugs. There's no approved therapy. And again, we've rescued a molecule that seems to work really well. And it's been used in humans, but it never crossed the finish line. And so we believe we can take it by targeting this drug at very specific types of never smokers. That trial is starting. We're starting site selection this quarter, enrollment the following quarter. It's an 80-patient trial. And I think it'll have massive improvement in the overall survival for never smokers. And then we've got a number of other programs. As I mentioned, any one of these programs can be worth several hundred millions as they get out licensed or partnered out or sold to bigger biotech or pharma. One of the things that people were most excited about was the data we released earlier this quarter in pancreatic cancer. And that work is being done with Fox Chase. We had 93% tumor shrinkage in 8 weeks in vivo animals. That's unlike any other pancreatic cancer drug, even though it is small animals, mice. But cancer has been cured in mice thousands of times. But still, the data was pretty remarkable because, again, it was AI guided. We used AI to say what specific type of pancreatic cancer and what marker should we go after. And so now we're preparing for launching all the safety work and then going right to humans next year. And again, that's a big indication. It's about $1 billion spent on pancreatic therapy just in the US alone, and about $2.5 billion globally. And we think we have a very, very compelling molecule that first we'll go after pancreatic, and then we have some really great data going after bladder with the same molecule.
Yeah, wow, that's impressive. So I got a couple of questions. Do we know why that is that never smokers don't do as well compared to people that have smoked?
There's a lot of theory out of the biology of the disease is very different. So in fact, they probably have a very different type of lung cancer. And so if you look at the mutations in never smokers versus smokers, totally different. Totally different. So really, it's a different disease, even though it affects the lining of the lungs, adenocarcinoma. And that's why they don't respond to chemotherapy as well. And that's also why they don't respond to immunotherapy. They do respond to targeted kinase inhibitors, but eventually the cancer becomes smart enough and it finds a way to evade the kinase inhibitors. Sometimes people stop responding to these kinase inhibitors in 9 months, sometimes 2 years, sometimes 3 years, it varies. But then what's next? And that's a big challenge in lung cancer today. So for the never smokers, they're put on typically chemo, and the chemo kind of works, kind of doesn't work, but it does help. But the outcomes aren't very, it's really under a year. And so we believe our drug, when administered with chemo, actually doubles the overall survival. And we've seen that in historical trials. So we're now going to replicate that in this targeted never smoker trial. Totally different disease, different mutational profile, and there's no therapy today approved for never smokers.
Got it. And then I do have these pipelines pulled up. Something I'm curious about. So we see the prostate cancer is in phase 2. The non-small.
9 patients enrolled so far in that trial.
Okay.
Pretty good data there.
Out of these different diseases and treatments, what has the highest market opportunity?
It's a great clearly non-small cell lung cancer and then pancreatic. Those are just massive multi-billion-dollar global opportunities. Non-small cell lung cancer for never smokers is about 20% of new cases. So 20% of cases globally, just in the major medicine markets. Not all of them, not everyone pays the same for drugs, unfortunately or fortunately, but in just the major medicine markets, about a little over $3 billion spent on never smokers for that therapies. And those, again, the outcomes aren't great. In pancreatic, it's about $2.5 billion. So both are 2 big areas. And typically drug sales go for about 4 to 6x peak sales once you're past phase 3. Once you're past phase 2, it's about 50% of that. So again, we get through phase 2 or into phase 3 with some of these, and these are exits in the billions for each of these molecules.
Got it. And then so for the never smokers, like that language, it's not non-smokers. So is this different than maybe someone who smokes like once or twice a month? Is it really someone who has never once smoked a cigarette?
That's a great question. There's a clinical definition. I'm not a clinician by training, but the clinical definition is less than 100 cigarettes in your lifetime.
Is a never smoker? Is
a never smoker, yeah. I think and there's some definitions, less than 100 in your lifetime, plus no tobacco products in the last 10 years. So it really is like a never smoker. Not if you're having a cigarette here or there and you're doing it, that wouldn't classify as a never smoker. And actually, it's funny, we're talking about it internally to say right now we're going to rely heavily on the clinician, the patient, to say, hey, I'm a never smoker. But there actually is we actually could do a genetic test. And so we were thinking, well, would that be worth it, or would that just cause an impediment? So we're going to rely on the clinical history, but there actually is a genetic test that you could do. We could look at the genes, because tobacco mutates certain genes totally differently than if they're mutated by other things. And so actually it's the world of genomics is just fascinating. There's just so many things you can learn about almost literally anything that touches or impacts your body. And so we're just beginning to uncover this. We're just beginning to uncover it. And more importantly, 5 years ago, we didn't even have the computing power to do these things. And today I can ask our team to spin up 24 supercomputers in the cloud in an afternoon, and we can churn through billions of data points. I mean, our data lake is now about close to 5 billion data points, and it gives us tremendous power. And we're hoping to close this year somewhere in the 8 to 10 billion data points in cancer. So it just allows our innovation engine to be faster and more powerful every single month.
So what is it about the technology at Lantern Pharma that kind of sets it apart from other, AI genomics companies?
There are very few that are focused 100% on cancer. So all the data we take in is only focused on drug-tumor interaction. And when you do that, your focus allows you to develop better algorithms. And so these algorithms sit on top of the data lake, and they compete to give us different types of results. And so the AI platform doesn't solve all the problems. It allows us to just ask and answer questions more rapidly. And then you still have to have smart cancer biologists and computational people, and they have to work interactively to then say, does this really make sense? But we have such a great starting point because of the quality and the meta tagging of the 5 billion data points we have. And that, again, I think it'll grow 8 to 10 this year and probably 20 to 50 next year. And that just becomes more and more of a moat. And then we have algorithms that sit on top of this, and all these algorithms we're beginning to automate. And so again, for someone to build this kind of system, it would take years. But on top of that, ours is focused 100% in cancer, and that gives us a big step up also.
Yeah, I mean, I can imagine that the cancer market opportunities are a lot bigger than other ones.
Yeah, I mean, the disease, I'd like to talk about how we're about to enter a golden age of medicine, in a golden age of AI-driven medicine, because today, if you can believe this, there's only 89, less than 90 approved targeted cancer drugs, small molecule cancer. That means there's more types of water and vitamin water and fizzle water and CBD water and orange water. There's more types of waters in a Whole Foods or Trader Joe's than there are approved targeted cancer medicines. And we talk about precision medicine and personalized medicine, but if we really want to have that, we have to be churning out dozens and dozens of new drugs every year. And actually, maybe even increasing the pace. There are over 200 different types of leukemias and lymphomas, and only about 30 or 40 medicines. So there's a massive disconnect. We were about to enter into a golden age of productivity in medicine, and places like COVID-19 have shown us that there's no way that without computational virology and genomics that the RNA vaccines could have been created in a year. Impossible. And so we're now beginning to see how we can point that at a whole number of other diseases. And oncology is much more complex. It's not just one disease. It's like I said, it's hundreds, if not thousands, of different diseases. And for those diseases, we're going to need hundreds, if not thousands, of drugs. And so again, we're sitting in an era where we have less than 100 probably targeted medicines. And so we've got to get to 500, we've got to get to 1,000. That means that companies like us have to be able to do this cheaper, faster, and with greater efficiency. So I think companies like ours, and I'm biased, of course, we think we can totally smash the product development cycle, just like every other industry has done. And when you do that, you open up totally new ways to revolutionize the space. And that's what I think a lot of the new data-driven, AI-driven drug development companies are doing. We're going to take this industry that spends billions of dollars in research, but only churns out a few drugs a year, to totally revolutionize it. And I think that's going to happen here in the next decade.
Yeah, I mean, I hope you're right, Mr. Sharma, about it being a golden age of drugs to treat cancer and whatnot coming out. And like anything else, with coronavirus, there will be good things, silver linings that come from a really bad thing. And I think that was one of the silver linings, was seeing how quickly an RNA vaccine was able to be deployed. Really just fascinating from the medical technological standpoint.
Yeah, and again, a lot of that core capability, which is data sharing, better understanding of genomics, and use of computational tools and design, are the same things that this new era of companies like Lantern are using in different disease areas.
Definitely. All right, Mr. Sharma. Well, thank you again for coming on. For anyone that wants to check out the stock, the company is Lantern Pharma. The ticker is LTRN. Anything else you want to leave us with? What do investors have to look forward to for the next year or so that you haven't mentioned already?
Yeah, we have some data coming out, and additional data in pancreatic. We have data in glioblastoma coming out from our collaboration with Johns Hopkins. And we have the launch of our LP300 trial later this quarter. And then next year, all of our drugs will be in various phases of trials. So that'll be a massive year for partnering and licensing for us. So we've got a very busy next 12 months.
Wow. Well, congratulations on the growth, and good luck with all the ventures coming up. I'm sure to put this stock on my watch list, keep in touch with the company. And as always, Mr. Sharma, if you have any news, anything you want to break with us, come back on the show. We'd love to have you.
Great. Thank you very much for your time. I really appreciate it.
No problem. Thank you for taking time out of your busy Friday to join us.
Bye-bye.
Bye-bye. All right, y'all. That was Lantern Pharma, ticker LTRN. Very interesting company that's doing some amazing things in the genomics AI space. Yeah, and this industry is one that I just expect to continue to grow. There's a lot of good ways to kind of play that industry. One of my favorite here, let me get my screen back on Benzinga Pro, and we can check out kind of what's going on with different stocks in that industry. Obviously, Kathy Wood from ARC, they have ARC-G, which is a genomics. So let's see real quick on Benzinga Pro if we have any. All right, so peers of Lantern, we have Ayala Pharmaceuticals, Aquilium, Heat Biologics. But let's go to ARCG. I want to see what Kathy Wood's genomics ETF has been doing. Let's go to the chart real quick. We're looking on dailies, of course. So yeah, we saw this ETF, and this has a bunch of companies that are doing very innovative things in the genomic space, like Lantern Pharma. I'm not sure if Lantern's a holding in this ETF, but we saw this get all the way up to $115 just a few months ago in late February before coming down to about $80, and it's been trading in this range. This is one. I don't love ETFs personally. I like to kind of have a higher conviction, pick my stocks myself. But this is one that I would not mind just buying and holding, because I think this industry is just going to be a massive industry in the biotech world. All right. Well, I see we do have our next guest here. Very excited about this. This is the founder himself of Wall Street Bets. So without further ado, let's get right to it. Jaime, welcome to the Power Hour.
Hi. Thank you very much for having me. How are you?
I'm good. My name is Aaron, by the way.
Hey, Aaron.
So, Jaime, tell us a little bit about yourself before we get into the Wall Street Bets madness.
I don't know what you want to know. I'm like an entrepreneur at heart, economist and computer engineer, but I guess I'm most known for having started and created Wall Street Bets. I'm very involved with all things related to the stock market since, it's been at least over a decade. Starting to work my way into crypto, heavily kicking myself for not realizing, for just assuming they were coins whose values went up and down, not realizing some of the mechanics of what's possible with it. So I'm getting myself involved in that world, but, married, I'm a dad.
What did you say, you're married?
Yeah.
Oh, congratulations.
Thank you.
So you said you've been investing in trading for about a decade. What kind of spurred you to get into it?
So I start Wall Street Bets in 2012. Shortly before then, I'm working at this big international bank, and I'm getting paid really well. I get my 401k or Roth IRA, and I have all these perks that come along with it, but I also had just money left over, right? Like there were a few things that I was interested in having, mainly a car and a place to live. And outside of that, decided to put this money to work and understand that if there's higher risk, there's higher potential return, and start looking for places that wanted to talk about this type of approach to the market. And there just, most places are either, hey, this is the way that you should take traditional investing, really conservative, low fees, diversified, blah, blah. Or you can go to the other extreme, which is these professional traders that sit there in front of the screen all day long, just looking at chart patterns. And they haven't, it's a profession, it's a discipline around that. I really wanted somewhere in the middle, which is like, look, I want to keep my job, but I want to see if I can hit the lottery ticket or at least make my extra money grow. So that's kind of what happens. And turns out after Create Wall Street Bets, there's just a lot of demand for this type of thing, because inherently it starts growing and growing and growing or I guess organically, without really doing any advertising. There was a lot of people in my same shoes, and every year it doubled in size until last year it was at about 2 million users before GameStop happened, at which point it just exploded to like 10 million people.
So, Jaime, were you already on Reddit before you started this subreddit, or were you looking for a place to kind of start a trading community?
I was already on Reddit, and that's why I picked. For starters, I started Wall Street Bets on a number of different social networks, but most of them were just accounts that I owned, like the Twitter and Facebook and IRC channels and chat rooms, basically. But Reddit was the place where I wanted to create the home for this. Big fan of Reddit. I'd been a part of a lot of the things that they had done up until that point. I had migrated over from the days of starting with Slashdot to Dig, and then eventually Reddit was much better than all those. And so I decided that would be the place for it.
Yeah. And then, so I remember kind of when Wall Street Bets started taking off last year around COVID time, and there was more people trading options, really. Like, people got infatuated with seeing people's crazy returns. And obviously, so I got the page pulled up right here, and I'm surprised because back then, like every single screenshot was from Robinhood. And then recently it hasn't been as much. Like it seems like more other brokerages, I don't know which one this is. I think this is E-Trade or something, but it seems like Robinhood and Wall Street Bets were kind of synonymous for a while.
Yeah, I mean, that's true. When Robinhood first came out, by the time Robinhood came out, I had already kind of figured out my trading strategy, right? I could still buy my scratch off lottery tickets and understood they were insanely risky, but I would just put a little bit of money in and hope to make a ton of money. But outside of that, I'd figured out kind of a sustainable trading strategy, which I could use to supplement my income. And a lot of that relied on good execution and bar charts, like Robinhood didn't have bar charts. So I didn't like it. And the community just really liked the interface. Obviously, they liked the fact that it was free. They loved the easy to, they break the options can be insanely complicated, or they can be as simple as they are on Robinhood, which is, do you think the stock's going to go up or down? And you answer with an arrow that's color coded and it kind of takes you to the right place. So there was hunger for that. And so I let it go. And sure enough, this group of people created their own kind of genre, which was in itself sustainable, what we're now probably referring to as meme traders. Right. Like I've talked to so many people and I've met so many people that have sustainably, I'm talking years worth of a sample size, been able to make a lot of money. Obviously not everybody does, but nobody, not even high frequency computers make a lot of money. Like there's always a subset of people that don't, but there's enough people that have made Robinhood type trading strategy successful. Roaring Kitty is a great example. He doesn't care if a stock price, if he gets better or worse execution on $50,000 worth of call options, it turned into $50 million. And he's very correct, whatever a few cents when you're talking about that. So yeah, Robinhood was there. And then obviously last year, no, it was this year, I'm sorry, the GameStop madness took place and Robinhood had to make restrictions on trading GameStop, which angered a lot of people. So you still have kind of like a group of a subset of people that are angry at Robinhood, but I don't really look too much into it because last year when the pandemic was kicking in, we had some of the most volatile days in market history ever. I mean, it was just lock limits up, lock limits down, like 10, 11 in a day. And Robinhood had suffered an outage there where it's just their platform, right? And that to me was unforgivable. It's like, dude, this is completely on you. And people obviously lost money and they got angry at them, but then they forgot, they moved on. The interface is really good. And with this GameStop thing, it really wasn't like every major broker had to do it. It wasn't just Robinhood.
I know
so, like if they can go to whatever competitor they want to and Google what happened back in GameStop and they'll realize, oh, they did it too. Like,
right.
Because it wasn't them. It was a regulatory issue.
It's just crazy to me that kind of how Robinhood gets such a bad rap for that name. And I think it was just because at the time, most of the AMC GameStop traders were on Robinhood. But I mean, the same thing, like whether you've been on Webull or TD, it kind of was the same thing. But
Charles Schwab, Vanguard, like they all had to restrict. I mean, all of them different capacities, but they all had the same regulatory issue that they were facing.
What I do remember, though, as you mentioned, like right when COVID hit and we saw kind of volatility and liquidity like we had never seen before. I remember I was on Robinhood trading and there were many days where say I had open option contracts from the day before and I'd wake up, before market open, and then as soon as the market opened, like nothing would load, and I'd just be like, okay, great. Like I have these options that are doing really well, but I can't sell them because I can't get into my Robinhood account. And that was before, even the GameStop, AMC, all of that stuff happened. That was just last year in March when the COVID crash happened. So, maybe that should have been a sign for me at the time, like, hey, find a new broker. But it always worked well for me, and I love the interface. So I'm actually still on it, but I do have a couple accounts at other places.
Well, I mean, first of all, that's another good point, right? They're not mutually exclusive. You don't just need to use one broker. A lot of people use multiple brokers anyways because they trip the pattern day trader rules. They don't have 25 grand in their account, so they just kind of switch from broker to broker. But you're a perfect example. People just love it for some reason. And I think it's the interface. I think it's just really comfortable. And that to me is a much more unforgivable incident, all of which they've learned, by the way, right? Like, I think Robinhood really has done something. Like, all of these conversations are possible thanks to them, so we can't lose track of that. All the other brokers now have to offer free commissions because of Robinhood, so some credit is due there. But yeah, they've had some growing pains, and they had growing pains before that where sometimes it was in the user's favor. Let's not forget the time where people exploited box spreads, which eventually morphed into what they called the infinite leverage, or the free money cheat code, right? Which is like, they took advantage of these asymmetries and they pretty much put the risk on the broker, and they themselves were just, they had a chance to give a banks a taste of their own medicine type thing. But that's an example of them kind of also going through learning pains, which worked in the customer's favor. So I don't know. Like, I think that Robinhood is a historic, no matter what happens from here on out, that what they've done is just, they're cemented their place in history. And I'm not worried about people going away because of what you just told me, right? Everyone's pretty much in that same boat.
Yeah, I mean, look, like you said, it's not mutually exclusive. You can have different brokerage accounts. I actually pulled up my Robinhood portfolio on stream earlier because I was kind of in the mood to make a YOLO meme trade. And I was like, essentially, this is my YOLO trade account. Like, I have my long-term investing accounts in other places. This is the one where I like to just kind of make fun little options trades that, hey, I know there's a good possibility that the whole trade expires worthless. And honestly, for that purpose, Robinhood works perfectly. Like, I can very easily, buy a call or put option a couple weeks out, and it's super easy. I don't have to, my other brokerage accounts, like, I've tried trading options in them before, and it's not that it's impossible, or it's not that I'm
click and click and click and click and click.
Right. It's not that it's impossible. It's not that I can't learn how to do it on interactive brokers. It's just that it's easier on Robinhood.
Yeah. No, and I think a lot of people sympathize with that, and I think that's why I think that what they've done is great. And look, they're continuing to innovate, right? Last I heard, they're trying to get into private investments, which I think would be just earth shattering, right? Because it's got a lot of regulatory headwinds ahead of that. But if they break through that, that is so important for the democratization of finance, right? They're starting to get into crypto as well, and then once again, that's something that I really think is the most under talked about aspect today. And it's one that I directly said, no crypto on Wall Street bets, because crypto is just another asset class it's uninteresting, and it's still in its infancy. So the execution itself is not very good. And people just like to talk about how much Bitcoin costs, and that's not interesting either. But by golly, if I'm wrong, like, did you know, or at least I just found out that on the blockchain, you can have these things that are called variable leveraged ETFs. I know that you said earlier that you don't like ETFs, but I'm not talking about like the basket of goods type of ETF. I'm talking about these synthetic, whatever you call them, exotic things where you say, I want to have 3x exposure to Tesla, right? So I want to buy 3x exposure to Tesla ETF. And then there you have some leverage without stock options. Like, that's the type of ETF that I'm talking about.
You're talking about the cryptos that are essentially like mirroring stock assets. You can buy in the crypto on the blockchain, like a 3 times levered Tesla ETF.
Yeah, I mean, first off, you have the crypto mirroring the assets from Wall Street, or from any street, really. Korea, you can buy Samsung, whatever. But yeah, above that, it's creating a 3 times leverage one, and this may be a little bit technical, so I'll try to simplify it. But those exist in normal Wall Street also, these 3 times levered ETFs, and you buy it, it's got a ticker symbol, and you can buy a 3x levered China for bull and bear called yin and yang, right? Like, it's got cute names and everything. But the problem with those ETFs is very technical. They kind of have this nasty side effect where in the long term they go to zero, right? Due to something called volatility decay, something that I've been keeping my eyes out for decades. Like, crypto people figure that out. They're like, dude, don't make it 3x, make it variable, right? And so without getting into the math, they fixed a huge problem that Wall Street has had since it started, right? And that's just one of a million examples where they're making things better. 24-hour day trading, get rid of gap risks. Make sure that everyone's constantly rebalances. Like, that's a systemic risk for normal Wall Street that doesn't exist on the blockchain. I'm talking about people that are trading at 2 a.m. I'm talking about, prices that can't gap up above your stop price, right? Like, that's important for, we've had a lot of bad things happen because of gaps.
Yeah, definitely. I mean, I think that's one of the biggest allures to the crypto markets is that it never closes. Saturday night, you want to day trade some Doge, you can do it. You can't do that with stocks, but definitely Yeah, I mean the ETFs. I didn't mean to say like I don't like ETFs at all. Like I'll trade them. Like I have this one pulled up. I think the yin and yang one you were talking about is also from Direction. They have a bunch of good levered ETFs. This is a home builders and supplies bull. So I traded this one a few months ago when, let me go to the longer chart, when kind of just like the lumber prices were going crazy and everything. It seemed like I bought it basically here on this rip, and it's kind of sold around up here, and then it's fallen off since then. But these leverage, they're fun to play, but they're definitely riskier. And now actually on Robinhood, they have like a little disclaimer when you go to buy a leverage ETF. It'll say this asset is leveraged, like not for beginner traders.
But it's not even about like the 3x leverage, not beginner because it can lose 3 times faster. It's because you're going to lose with 100% certainty. Like I'll tell you what this chart looks like the moment that lumber stops trending. So the moment that lumber starts ranging, meaning like it just stays at the same price and it goes up and down a little bit every day, the price of this ETF is going to go to 0, right? You get to see the opposite when it's trending. When lumber is going up, this thing goes up exponential. So you have like a compounding effect, but then you have the inverse of the compounding effect when it's not ranging, when it's not trending, when it's ranging, you get this decay where it makes it go to 0. And that's what all ETFs, that's why they all have to do with these reverse splits all the time, because they're like trading pennies and they can't even track the percentages properly when they're 2 cents. And so they have to do a reverse split, and then there you go.
Yeah, that's why if you look at this one, this is the Gush 2 times levered, basically oil. So if you zoom in on the chart, it doesn't look too crazy. It's fine. But if you zoom out, you can see back here, it was $16,000 a share, and now it's $67 a share.
And to be fair, it was never worth $16,000. It just reversed. This chart is making up for the reverse merger. Sorry, the reverse split.
Yeah, exactly.
So, but all leverage ETFs end up like that. And what the crypto people figured out is how to make these things so that they go to 0, but it takes a lot longer before they goes to 0. I'm talking probably never. It'll lose value, but by the time it's lost enough value, it'll start trending again, and then you'll get the compound effects to offset that. So I don't know. That's just one of a million examples. Like another thing that I'm really getting into is, well, first taking advantage of the community. Somebody did a study from a big name school, an academic level study before GameStop, and they said, we're picking all the stocks they're talking about on Wall Street Bets and comparing it against the market. And we're going to see if you guys do better or not. And it turns out, are you still there?
Yep.
Okay. Yeah. Sorry. I just looking at myself. So they did this study, and you can put me back on the screen. That's fine. I just wasn't sure it was there. They did the study, and it turns out that the community does actually beat the market against the index. The stocks that they were picking, they were better. And so I said, okay, well, why don't we take community aspects where this is obviously the case, and we can take crypto, which I believe can do more things, and we can mix asset classes. So you can put Bitcoin and Tesla and Samsung, right, and gold or whatever, just all these different things, throw it into an ETP, these portfolios, but it's based off of the community's decisions, right? These community that's proven that they can beat the market. And I don't know, we'll see where that goes, but I'm super excited about that.
Yeah, I mean, that's really interesting. I know throughout when the market started ripping from last COVID, that was something that even the mainstream kind of financial media, CNBC, was talking about, that the retail investors were actually outpacing, institutional investors on returns. And real quick, while we're on the Robinhood subject, I'll go back to the chart real quick, see what it's trading at. But I do think another criticism that is kind of overblown, which I told you the story about how I couldn't even trade like some of my assets on Robinhood. That was before even the big GameStop, AMC. Like there's certainly, the platform's not perfect, but I think one of the biggest criticisms that comes from the crypto community is people that talk about, oh, you buy Bitcoin or Ethereum on Robinhood, you don't actually own it. You can only buy and sell it. You don't have a wallet. You can't send it to anyone. And at the end of the day, I think a majority of traders, crypto traders, are just trying to trade it to make profit. They're not trying to like take the actual Bitcoin and then send it to someone, or at least that's the boat I'm in. So I don't necessarily care that I don't own that Bitcoin or whatever. I can still buy it and then sell it at a higher price, or maybe a lower price if it's a bad trade. But I get the criticism, but I'm just saying I don't think it's that big of a deal for the average trader. No,
you're 100% right. And so the crypto community has this culture that's ingrained of a little bit of what do you call it when you're paranoid, and just it was born from this whole F the system and the central banks, whatever, with language that was really kind of activist base, right? But you're right. The majority of people, like if you want to do things correctly, which is to have your thing and take advantage of this crypto technology, you have to open this wallet account to pick the right network, and you have to configure it with the different names, and you have to fund it with the correct type of thing. And if you send the Ethereum to the Bitcoin account, then it disappears because you have to be really careful, and just, you have to go, like, I want to tell my mom about this coin that this is DApp, really. It's a DApp that's doing all these things I described. It's like, I'd like to buy some. How can I? And I stopped and I thought about it. I was like, actually, it's probably best that you don't, right? Like, it's not worth me explaining it to you, all the steps you have to take. Obviously, we're going to solve that because we realize just what you said. A lot of people want to get exposure to the price action. Like, they're not, let's be serious about what happens with brokers. These counterparty risks, they exist with brokers as well. You can own the stock or whatever, right? But the broker, or you can have your money with your broker. You have like $260,000 cash, 10,000 above what's insured, and the broker can turn around and fail, and now you've lost $10,000 because the insurance only covers a certain amount. That type of risk exists with banks, exists with everything. So you just hit the nail on the head. That said, I think that Robinhood is now on. I keep hearing rumors about them also allowing the wallet so that people can do that too.
Yeah, I think they are going to end up doing that just to try to appease like the more serious crypto crowd that wants to be able to say they actually own it. But let's bring it back to Wall Street Bets real quick. Just a couple more questions and I'll let you go. So from what I understand, you founded it and then you kind of took a hiatus. Were you weren't with the community for a while?
So there's a lot of things that I've never actually gone out public, right? There's a lot of things that you can piece together from either conspiracy theorists or little blurs, but you've never really heard me talk about what's been going on with my life. And there's a pretty darn good reason for that. Most especially around the reasons of my eventual removal from Wall Street Bets. That same reason is also the reason why I can guarantee you with my firstborn child that you will never get the top moderators to show their face on this or any podcast ever. And there's a good reason for that, right? And so I've decided to stay quiet for the first year because of the good of the community. It really kind of diverts from the subject. Wall Street Bets is such a great community. There's 10 million people that I have nothing against. They're absolutely incredible. And I didn't want to really muddy the waters, but I reached a point where I decided I think I'm going to go public with my story, and I want to do it the correct way. So at this point, I've signed the rights to that story, and then the process of, it's like a movie studio and then documentaries, TV series, whatever. So that's in the process of being done, and what happened during this hiatus and what happens during my removal and all these things are addressed with full transparency. So you guys will be able to see that next year.
Awesome. Yeah. I mean, I've been saying that for a while now that I can't wait for kind of the documentary to come out about not necessarily just about Wall Street Bets, but about the whole AMC GME thing, because, everyone had their not own idea. I mean, it was very popular at the time, the whole Rage Against the Machine, small guy, David versus Goliath. And then it turns out now looking at the data that actually a lot of institutions made a lot more money than even the retail traders in the whole AMC GameStop thing. So very interesting kind of seeing what like the storyline will end up looking like there. Yep. But yeah, I mean, what do you think about as far as the community on Wall Street Bets today, as opposed to maybe in its infancy or even back before just the whole COVID craziness and GameStop and AMC?
So I was a moderator of Wall Street Bets from the day that I created it up until a year ago, right? So this is close to a decade. And the most consistent thing that never changed about Wall Street Bets, continues to be the case, is the pace at which people would say, we miss the old Wall Street Bets, right? Like this place is not what it used to be. And it was just because more people come in and grow and things change, right? Like you have things that are exogenous, like these brokers that are Robinhood, whatever, that change the landscape of these things. You have things that just change the conversation. Back when I used to trade stocks, I'm not living in the US anymore, so it's trickier for me to do it. But when I was super active with it, after hours was like from 4 o'clock to like 5 o'clock, and that's it. Now I'll go in and I'll look at SPY, like some of these index ETF, like they're trading at 3 a.m. I'm like, all right, so this is now a 24-hour stock. So I don't know what those things kind of change the fabric of it. So the community has constantly always been evolving, that's for sure. And it's part of what makes it resilient. I think that if the conversations were the same as they were when I started it, it wouldn't be as interesting as it is now. That said, I do feel that the current moderators are letting the sub get a little bit away from him, because the one thing that was also consistent was the spirit of the subreddit, right? And the sense of community and wanting to bring people with knowledge as well as people with thirst for knowledge together at the same place. Sure, playful banter, sure, with their own lingo, kind of, feels like a exclusive club to get into, but you quickly get into it. It was just this inviting place for everyone, and that's really what made a lot of it magical. I'd say that has probably been the most palpable change since I left. Is just kind of the direction of the sub as a whole.
Yeah, I mean, like any community or group of people, things will progress, change over time. But I've seen that sentiment a lot being passed along, that like the old Wall Street bet. I miss the old Wall Street bets, essentially. So I just wanted to ask you about that.
Yeah, no, and you have a good reason to do it, right? Like there was a sense of the old Wall Street bets, even when people would complain about it, because it's like, yeah, this is, now we're allowing screenshots of the Robinhood, or now we're talking about, allowing these memes, and people are like, oh no, we should go back to being serious. I'm like, no, just give it a try. Like, trust me, or trust the community. Really, it's not even me. It's the community that's always been in charge of spearheading these changes as the landscape and the people grow. But there had always been just this common element of having it feel like home. And you could say, well, it's because it's so big at the Eternal September and, 10 million people. It's like, yeah, but it was big at 2 million people too, and 1 million people and 500,000 people. That's a pretty big community. And you still didn't lose touch with that kind of a belongingness feel that I feel is a little bit absent now. It's just more of just a lot of noise, I guess.
Yeah, definitely. And I mean, it's such an interesting, because I guess just all these things come together, like first Reddit had to been able to be possible to make a community like Wall Street Bets. And then Robinhood had to be available to make free trading. And then COVID had to happen for everyone to be at home and trading on their phone. And then for AMC and GameStop to happen, all where Wall Street Bets kind of got roped in and being the center of it. But there are all these moving parts that kind of just over time, like puzzle pieces, like fit together.
Yeah, no, and that's exactly what happened, right? Like there was no one thing that's like, well, so none of this would have been possible if it wasn't because of you. It was like, well, none of this, like it's not me that did this, right? Like it was a whole confluence of things. I was but a small part in this, and I'll still say that Robinhood and the free commissions and this and that, like all these aspects. The one element that always was the most important is the community itself, right? Like before GameStop, people forget about this infinite money cheat code or the free money cheat code or infinite margin, whatever, where these guys figured out a loophole with Robinhood to get infinite margin. Prior to that, they figured out all these other exploits with regards to, I don't know, I have to really, with the delta squeezes and the gamma squeezes with stock options, right? Like we were on the cover of Business Week magazine and March of last year when they were talking about how Reddit can actually do these things. Like all these little exploits are all possible because of different individuals. You have Roaring Kitty for one, and then you have these other guys that did these other things, and who knows who's going to make the next one, but it's those people that really drive it. And I think that's what's most important.
Yeah, definitely. And I mean, I understand completely your hesitance to be, out in the public. So we appreciate you coming on today. I know that's kind of one of the biggest things that we've found from like a media point of view, trying to report on all this, is that a number of the influencers or people behind the scenes are people that do want to stay anonymous, and for good reason. I mean, we talked about the strength of the community, but also kind of what the flip side of that, what can happen when the community, decides to go against someone. It can get kind of crazy.
No, like that's where I disagree. I was not anonymous while I was still a moderator of Wall Street Bets. I went out there with my identity. I was anonymous for many years, but like 2018 or 2019, I was like, yep, this is me. I wrote a book and, started claiming this thing. There's good reasons why these guys want to stay anonymous above and beyond, hey, we're going to be big targets. Like when you have nothing to hide, you have no problem going out on TV, right? Like when you have really nothing to worry about, I'm here with a clean conscience, being able to talk all day long. I can't say the same thing about everybody else that's left there. And I know the reasons why that, and they know the reasons why that is.
Yeah, right. I mean, your case might be different. I was more talking about just in general about all these different like people on FinTwit and stuff. A lot of these accounts are anonymous and they want to stay anonymous for good reason.
Well, you know what I've learned? I've learned that a lot of these accounts, like they have more power with their username than with their actual real life name, right?
Yeah.
I'm working with this, you know, like I said, this WSB DAP, and there's a guy whose name is BTC Vix, and he's known in the crypto world as that name, and he's been on prominent podcast like Chat with Traders, which is, you know, an important stock trading podcast with huge viewership. Like, and he went on there as his username, right? And I bet the guy in real life, he doesn't have a problem with revealing his identity. It's just there's now more power to this kind of this image next to his logo and the username, and that's kind of an interesting. Yeah,
that's funny. All right, Jamie. Well, thank you for coming on. I mean, I think this has been a very interesting talk. Like I said, I'm very excited about the documentary, the movie coming out about the story, because I think there's probably more to it that we're not getting today, but that we'll get in the future. And if there's anything else you want to leave our audience with before you go, please do.
Yeah, you know, like I said, I made reference to we're kind of uniting crypto with Wall Street, and we're making huge headway. In fact, we're in the process of redesigning the website, but we still can see what we're doing. If you go to wallstreetbets.net, you'll get an idea of what this decentralized organization is for the creating and minting of these ETPs, being able to do these single stock exchanges on the crypto and a bunch of other really exciting things. So I would say check that out. I'd say wait a week or so.
On the website. All right. Well,
yeah, I mean, you can go to it.
Here, but yeah, I'll drop the link in the chat too. But we'll check back in a week and see if we.
You'll see all the details in a lot more clear. You know, it's obviously very meme-ified right now, and you have like the apes, and it's kind of like a video game feel to it. But what we're doing is just so much bigger that it just deserves to have kind of a serious, like a facelift that gave it a serious aura. So we're just finished doing that, and we'll have it up there. But check that out, and we're doing some really exciting things.
Awesome. All right. Well, thank you again, Jamie, for hopping on with us. I'd be very happy to have you on again, maybe to talk about more developments in the story, as far as, you know, what you have coming out on your end, any developments in the website and that kind of crypto synergy. So again, super exciting stuff. Thank you again.
Thank you very much for having me, Aaron. It was a pleasure.
No problem. Talk soon.
Bye-bye.
All right, y'all. That was Jamie, the founder of Wall Street Bets. Super interesting story there. Like he alluded to, we will get some more clarity on that story at a future date. So stay tuned for that. Let me get back to my Benzinga Pro real quick. And coming up right now, we have a very special segment. That segment is the Zinger Nation Hangout. We invited some members on Zinger Nation to come hang out with us. Some of our favorite zingers. Well, my favorite zinger. I'm going to bring him on. Joe, what's up, man?
Am I the only one that showed up?
No, we got a couple more. But if anyone else would like to hop on, please let me know in the chat, and I will get you that link. But right now, wait, sorry for doxing you. 13. 13 was in the office with us a couple weeks ago. It was great to meet Johnny Black. Johnny, how we doing?
Hey, can you guys hear me all right?
Yes, sir.
Yes,
all
we
right,
can.
Awesome.
Johnny, where are you from, man?
I'm actually, I work out of Connecticut, but I live in Oregon, you know, for certain reasons. I like their policies on, you know, their legalization and all that. So I moved out here a little while ago to start growing, trading.
All right. Well, thank you for joining us. Glad to have you.
No problem at all.
Of course. Looks like we've got Sanjeev here too.
Hey, hi, Aaron. Can you hear me?
I can hear you. How are you doing, Sanjeev?
I'm doing very good. Thank you for having me.
Of course. Where are you joining us from?
I'm from Singapore.
Singapore. Beautiful. Yep. We're getting the whole world over here.
Yep.
So what, you know, I want to hear some background on kind of, you know, Sanjeev, how'd you get into trading? Johnny, you as well.
I think Johnny can go first.
All right. So for me, I've been trading for, God, I'm 36 years old. I think I've been trading for probably 15 years or so. I got in, I think, like everyone else. Someone told me to buy a penny stock. I bought it, lost all my money. And I was like, let's do this again. So, so I just kept kind of sticking at that. Eventually, we actually got a big hit, Sponge Tech Corporation. It was a big pump and dump. We got in really early, made a killing. And then I was like, well, if I keep doing this, I'm going to lose all my money. So I kind of came up with, a bunch of different strategies throughout the years. Obviously went up, went down. At this point in time, I really run a pretty diversified portfolio myself. I like running the wheel a lot with a significant amount of my funds. And then, I like YOLOing as well, right? Some of your money, it's more fun, obviously. And then I run LARPs with another significant portion of my money. That's pretty much how I do it now. And it works out all right.
Beautiful. Yeah. We are getting a little static from your mic, Johnny, but we can hear you fine.
Got it. Let me see if I can fix that for you.
No problem. Joe, someone in the chat saying nice Lord of the Rings shirt. Is that an actual Lord of the Rings shirt, or is it? Nope. It's a Get Technical shirt.
Representing Neil.
And me. Come
That's
on,
nice,
man.
Yes, and you. You're on the show now too, aren't you?
Yeah, kind of.
Oh, yeah. Okay. Now you're on the show, man.
Yeah. What's everyone been looking at today? Oh, we got another special guest here. Pringers girl, she's shaking her head no.
No, hey, baby.
Hey, how's it going?
Hello.
How's it going?
Well,
Hello.
Where are you
I'm
joining
just
us
here to
from?
eat Pringles. I told AB I would be on the show to eat Pringles, and then, yeah.
That's fine. This is the Zinger Nation Hangout. You're more than welcome to do whatever you want.
Thanks, guys. Thanks, guys.
As long as we keep it PG, or at least PG-13.
I'll try.
Okay.
Wink. Emoji.
So Sanjeev, how did you get into trading?
I have actually been trading for maybe the past 8 to 9 months, and I actually came across trading during the COVID lockdown period. I started watching YouTube videos. I came across another channel. I think I shouldn't name it. But they actually plugged Benzinga in the channel, and that's when I got to know Benzinga and slowly started following you guys and started trading myself. Not a very experienced trader, but I have not yet busted my account, so I'm still fine.
Wow. All right. Well, yeah, like a lot of other traders kind of got into it during COVID. So glad to hear there. Oh, we have another Zinger Nation guest in the chat, getting ready to bring him on, Christopher. See if he's ready. Oh, we're getting some audio trouble, sounds like, Chris. He said 1 second. He said 1 second.
Like that fades out.
I think I recognize Christopher from Happy Hour also. Right?
Oh, Benzinga Happy Hour?
Yep.
Yeah, there's quite a bit of us in there. That's a great place to learn and talk.
Oh,
have anybody that's
the guys do a fantastic job. It's a must go-to place after the market closes.
Definitely agree with that.
Yeah.
So does everyone? Oh, sorry.
Go ahead, Johnny.
I was interested. Does everyone mostly sell options? Do you guys mostly buy stock? Like, what is your guys' standard? How do you guys trade?
I trade. Okay. I trade crypto futures and the Forex foreign exchange. I started. Hey, Spencer. I started with foreign exchange when I was 16, and then I liquidated plenty of accounts. Now I'm here trying to get by. Yeah.
All right, let's give Chris another try real quick here. Chris?
Can you hear me now?
A lot better, yeah.
All right. That was on Bluetooth earlier. This one, I guess, is a little bit better for you guys.
Got it.
What is up? How is everybody doing?
So the question Johnny asked was, do you guys trade mostly options? Do you trade stocks? Kind of how do you trade? So Chris, I'll let you take that away.
Yeah, options kind of like the poor man's way to, for me, trade the mega, cap stocks. usually just entering via spreads so that you don't look down and 10 seconds later your trade is cut in half. If there's for example, if there's something that doesn't have a huge volatility priced in, like the XLF, for example, is one that I'll go in naked on. But for me to trade the SPY, eat up my whole account to try to play equity on the SPY. So option spreads are a great way to kind of play these big names and not have to have a whole lot of buying power.
Definitely. And then I asked before you hopped on, Chris, kind of how Johnny Sanjeev got into trading. How long have you been trading for?
Almost now daily, 2 years. I got in. A friend of mine's father was a career trader. So a couple of years ago, I just kind of had started to drift in to discuss the market back and forth with a buddy. And he said, I had investments through work, where you build up 401ks and stuff. But he said, well, you know what, why don't you try Robinhood? It's, beginner's app. So I got in, and my very first trade was buying call options in Snapchat when it was $16. So 2 years later, kind of been rolling that trade around. But that was my very first day trade with Snapchat about 2 years ago, almost to the day, early August, 2 years ago. It was, teasing around 15, 16, $17. And he's been my mentor since then. So there's a lot of times when I'm spewing stuff in chat, it's just stuff that he passes along. Like this morning, he texted me, get long all the mask names and, look for lockdowns. So I said to him, well, get long Peloton and look at, Peloton right out of the gate. And it's been hovering around the highs all day. So it's great to have somebody who's really experienced, obviously, for me to just call up and, and now he calls me because he was not a big options trader. So 2 years later, he calls me on options trades. So, just a tremendous world we have here to bounce ideas back and forth off each other. It's, just a great thing to do. Got it. Well, Spencer, how we doing?
Guys, this is fun. I've been watching in the background. This is a blast. AB, I had no idea you had so many friends.
So many friends.
Yeah, AB is one of the best.
Yep.
We got 13. What's up, 13?
How you doing, man? I'm doing all right. Getting ready to leave Texas here and not move out, but just like go visit and vacation. So I'm just not really doing a whole lot. Just kind of playing the long game.
All right, I've been away from the market for like the last hour and a half, a little bit. So somebody fill me in on, did I miss anything, or is it just a boring summer Friday?
Apple fully recovered.
Really?
Yeah.
Oh. Did it?
Called that this morning. I don't know if you guys saw that.
Look at Apple.
And look at the Smile Direct Club about to hit its highs again. Just saying.
Smile Direct Club. Good luck with that.
Well, no, that I trade because I'm an option trader. So what I do is I trade things with try to find zero deltas, which happen a decent amount in certain stocks. And so basically I try to find that when people make mistakes, I buy it, and then I just immediately will sell it, return right away when it has any type of, premium on it again, so I might pay $1 in premium, and then I'll sell it almost at the same point when there's just a little more volatility, at $4.
Cool.
And that's how I actually roll a lot of my money.
Nice. Yeah, you can do that. The options side of it is a whole different
I know.
Whole different thing.
I know.
All
cool. I'm hoping is that as long as it holds over 7, I just keep rolling it because everyone gets super scared under $6.99. They get really cheap. People even go below. I would imagine people just don't want to execute the options on Friday, so they get kind of nervous or whatever. So they just kind of let them go, and then I just try to get a little bump and sell them into someone else that wants to.
Nice. I've never made a Forex trade in my life.
Same.
Girl.
Why?
So maybe
yeah, you gotta let us know.
Yeah, maybe you can come on and do a little lesson for us on how to trade.
It's like a speed boosted gambling addiction. You can have up to 200 or 500 leverage, so it's really great a path to gambling addiction.
Leverage.
That's
Love
great.
leverage.
The thing that's always I found frustrating with the Forex thing is everyone freaks out over the smallest moves. You know what I mean? It's like these moves Like, it went up from 1.1 to 1.13, and you know what I mean? It's like okay, do I care about
Don't we do the same though in pre-market prep?
but the numbers in Forex are so small. Hey, let me pull up some pairs right now. Just I don't look at this stuff usually, but in the last year, let's pull up the euro dollar. Okay, we've gone from 1 point in the last year, 1.22 to 1.18. Like, how do you know what I mean? It's like these ranges are so narrow, but I'm not against it or anything. I just haven't done it. I'm open to it. But that's always turning me off, just seeing the moves are so small compared to stocks. It seems like. Cool.
So we're seeing a whole bunch of indices selling off or opening lower today. What does everybody think we're going to be seeing on Monday? Think we rebound? Think we come back up?
Let's see.
We do have payroll inflows starting next week. So those all the payroll money that comes in for the IRAs and 401s, 401ks. Those are all going to be coming in. They come in on
it's the first and the third week.
Yeah, something like that.
Wasn't there some number out of Chicago today that then the national number coming out next week? Was that I don't think it was a CPI. I thought it was something else. I'll try to find that today. I don't think it was a big market mover.
Wait, Marco
comes out next week.
We'll get back to that in a sec. Marco in the chat saying he has a stock to buy right now. Marco, either you can hop on with us, pitch us the stock, or drop us the stock in the chat. Let us know your thesis in 1 to 2 seconds. It sounds very urgent, so I'm curious to hear it.
It sounds incredibly urgent.
It sounds incredibly urgent. The right now in all caps. I don't want to miss this buying opportunity.
No, I don't know. I don't either. It's amazing.
I have a question though. I don't live in America. Is America turning a bit cautious regarding the inflation thing? Like a bit cautious with their money? Because I keep looking at gold and thinking there's potential in there.
Are Americans turning cautious with their money because of inflation? I would imagine we would all have different answers for this. It's so personal, right?
I mean, Powell keeps saying transitory, but he keeps repeating it at this point that people don't believe in it anymore.
Yeah, well,
I'm exposed to gold and silver.
You are? Okay.
I'm exposed to gold and silver. Yeah.
I can't speak for everyone else, obviously, but for myself, am I cautious or anything? Not really, because I can't. How can I really control that? I can't
burn some cash.
Burn some cash. Yeah, buy Bitcoin or something, or buy gold and silver. I don't know.
I think the thing with inflation right now that we're seeing is that a lot of the CPI numbers coming out look a lot scarier than they are, because when you go into the numbers, they're being driven by certain sectors. So if we really saw a 5% year over year increase in goods across the board, that's when I would kind of start to be worried. But people have been, so-called gold bugs, the Peter Schiffs of the world have been calling for inflation for 25 plus years, and it never comes. And right now we're at a point where we are seeing some inflation. So I think those people are feeling vindicated, and same with some of the Bitcoin people. But at the end of the day, I don't think the US dollar is going anywhere.
I agree.
The thing I remember learning about inflation, back in school, was one of the things that makes inflation is when people think there is inflation. If people don't think there will be inflation, then there won't be inflation, right? But just the thought of inflation makes people want to go and buy stuff now, because they don't want to wait. They don't want to wait. They want to buy it now. And that in turn creates inflation, which makes people want to buy now, which creates inflation. You know what I mean? So it's a psychological thing. I'm curious to see what everyone else thinks. If anyone here is particularly concerned. My head is at not, because I can't control it. So why should I think about it?
No, I think the only thing to be concerned with would be the moratorium coming to an end and a lot of people losing their ability to have homes, and then those renters aren't going to be able to pay, and they have already not paid for many months. So eventually the banks are going to get such backlog, they're just going to take all the property, and then we'll see a big decline in house values, which will become a big problem. But outside of that, yeah, I would agree. I don't see U.S. dollar, all the gold hawks. I don't know. For 15 years, I've heard that.
Yeah.
I mean, buy GLD, buy GLD. Okay, cool. Buy SLV. Okay, cool. Great. But if you bought Apple, you would have made a killing. If you bought Amazon, you would have made a killing. Buy that crap. What are you making? Good job.
To be fair, I bought my silver in January, February, and March last year.
No, I'm saying there's always good trades, right? Like, we're always going to be able to buy something. Like, even with, we're joking about Smile Direct Club, right? Like, it's obviously going to end up going to nothing, or pretty low, or much lower than this. But you can make a bunch of money in the interim of anything. I'm just saying in the long terms of any kind of trade that you're going to make when it comes to gold, let's protect against inflation, so let's buy gold. Well, in the long term, why didn't you could just buy Amazon, right? And then just hold it. And that would have been a much better decision with your money than gold, right? I mean, at the end of the day.
The diversification, and that's the only reason why I have it.
I agree. I definitely have some alternative, whether it's certain, just, whatever it might be, little Bitcoin, some Doge,
Sure.
some, I love some giant ETFs, ARK, all QQQ, right? I mean, I run the wheel with over half of my portfolio. You know what I mean? I sell deep out of the money puts, and then when I get it, I'm like, let's sell out of the money calls until it gets called away, and I don't even think about it, so I do agree with diversification.
Yeah, the gold bugs are a fun bunch because they're never wrong. They're never wrong. They're just early.
They're just wait, it'll come
20 years early.
And then, what are they really hoping, that just the U.S. just goes like everything goes bad, anarchy, like that's it, the dollar's gone.
And then they have gold. Yeah,
and then they have gold. Like, what are you really hoping
what are you gonna do with the gold?
Yeah, what are you like? Oh, you're gonna buy what, bullets and guns? Because you should be buying those now with dollars.
Right. Yeah. I mean, trust me. That's my thesis on it. Is that kind of the same people, and it's the same with big Bitcoin bulls, as they'll say, like, go rush out to buy. But I think there are always other investment opportunities. And does that mean that gold and Bitcoin can't be a good investment? No, of course it can be. But do I think it'll be a good investment because the U.S. dollar is going to zero? No. And I don't think anyone should be rooting for that the U.S. dollar goes to zero. I think we'd all be in a pool of shit if that happens.
Whoa,
but yeah,
there are children watching the show. Hector Garcia, welcome. Hector, welcome, man.
Welcome. Hey, how you guys doing? Oh, am I stuck?
How are you?
No, we can hear you, man.
Hear you?
You can hear me?
I'm excited to hear what you have to tell us about Sava.
Oh, I'm sorry, I got spaced out here for a second because I was looking at myself on the YouTube. And I'm like, why are things not lining up?
Now you know. Now you know.
Now I know. Okay. Yeah. So, what was the question again? I'm sorry.
Sava,
I missed it because I was spacing it.
Sava. Help us out with this, Sava. Help us understand.
At this point, I'm completely lost myself. No. Listen. The phase 2 results, the ones that we were looking for, the ones that was supposed to like kick off this run, they were excellent. There was nothing wrong with the results. They were, in fact, I would even say groundbreaking results, just for the fact that the drug still had a positive effect at the 9 months mark. That the biomarkers improved, which is something that the Sava drug had failed to do in a previous phase 2 trial. But now now that we're analyzing like the long-term data, now we have a bigger sample size. Now we have longer-term data on the use of the drug. It's excellent. Like, no other drug has worked on any sort of real level against Alzheimer's after the 6-month treatment point. So and it shows like that it's also improving. It's not just maintaining, it's improving. So I don't know. I'm lost. I said that it could yesterday during happy hour. I said that the stock could go to $80, and it did.
Yep.
And it did. I still expect for it to take the market a little bit of time to readjust to what happened. I really don't understand completely the downturn. I understand parts of it, but the continued downturn today, wasn't expecting it. I think the next spot that this can drop down to is maybe 62. That might be possible, but if you're in it, I'd say hold the bag for another week and see what happens. That's what I'm gonna do, and see what happens if we're still not where we need to be. I would like to see this thing go up to 125 by next week, which I think it could as well. Like again,
that's aggressive, Hector.
Yeah.
Well, I mean, the stock moves aggressively.
Okay.
All right.
Right. Look, check it. Yeah, check out that 1 day chart. You see how this stock violently moves.
Yeah, I mean, I see right now it's sitting at this previous support level. So we're looking back to on the 19th. So just about 10 trading days ago, or maybe not even that.
Yeah.
But yeah, I mean, if it blows past this support, that could be trouble for any bag holders out there. But as you said, Hector, this stock, is a volatile mover, so it could shoot back up on the upside.
There really is no bad news for Sava, other than the bad news for some other companies like Biogen and Anavis, right? Biogen because of all the fallout from there, and that's what created that first big dip that you see on the chart. That's what caused it. It was on the news that the Biogen's drug was approved, and it sucks. And people at the FDA resigned over or the scientists who reviewed the drug. They resigned. Like, so much bad press from that flack that caused one of those first dips, and then also the Anavis deal where like they were promising to be so much better than cassava at improving cognition, and they come at us with some really shaky results from a sample size of 14 patients. No error bars or no mention of the significance level of their estimates. Nothing. Like, it was a big old nothing burger. More kind of like just lip service from Anavis, and that is what began the downfall of Anavis the night before Sava took a tumble, even after having good news. So I think the company is solid. It's still solid. It's a great investment opportunity, I think.
Well, I've definitely got it on my watch list. I see Marco in the chat. He hasn't given us a stock pick yet, but he's saying, LOL. Marco, this is not a laughing matter. I want to know the stock pick. You said right now. It sounded very urgent. Let me know if you're out there. Let me know if you have that stock pick for us. But all right, we checked out Sava. Anything else anyone is looking at? We do just have a few more minutes left.
Wait, if we go back to Sava, the chart looks like it's going to form a double bottom.
I said if anyone has anything else.
Fine. Okay, sorry.
No, I'm kidding. A double bottom. Okay, so you're seeing the first bottom here, second bottom here.
Yes, I missed the technical analysis with Neil.
You missed Neil. Okay.
Yeah, and I was looking for some double bottoms as well because of Neil. Now, because of Neil, all I'm looking for is double bottoms. Big, fat, juicy double bottoms.
Yeah.
Yeah, well, that's right now. Very appropriate at this time of the day because this is when we would normally have Neil on, but he's a little preoccupied today.
Yeah, so we're carrying the Neil flag.
Exactly. Yeah. We're talking about juicy double bottoms. I gotta say, I want to see it start forming here first, and then we'll start talking about it because we could see some other. I mean, look at the end of the day, this is very important where it's at now because it'll either hold this support line right here, or it'll drop below it. And if it starts bouncing from here and we see that double bottom forming, then that's great.
Yeah.
All right.
Options are expensive on that. Implied volatility of like 180.
Yeah, everyone's missing Neil's double bubble. Yeah, we've got some people in the chat. I'm gonna put them in time.
It just doesn't seem like there's anybody that has any real good ideas with the way the market's behaving right now. I see that all my REITs are up. So.
Come on, Joe. Joe, I know you got the next 10 bagger for us. What's it gonna be?
No, I don't have anything. I mean, here's what I think. I'll tell you what I think over like the next quarter what might happen, or even to the throughout the end of the year. Just because we've seen so many things go sideways, like indices go sideways and then move up, and then go sideways and then move up. It's kind of like that's how the market's rotating. That's what it looks like to me. It looks like we might start to see a rotation back into some growth, some smaller cap stocks, and then we'll see a rotation back into value. That's probably what will end up happening for the rest of the year.
So when do you like foresee this rotation back into value happening?
I think that could happen as early as October. I mean, if you look at the Dow right now. I mean, this is a guess, but if you look at the Dow, let me see. It's going kind of sideways.
Yeah.
So it looks like it's setting up to either move up more, or because the market just keeps wanting to move up for no good reason. And yeah, I mean, that's just all I'm seeing right now. Like I said, I'm going on vacation, so I'm kind of disconnecting right now. But for when I come back, I'm expecting to see small caps doing better.
Yeah, I mean, if we go back to May, which of course for these 2 months before May, from March to May right here, that's when we saw this big first rotation kind of out of tech into growth. Yeah. And since then, we've seen growth pick back up, but Dow's just been trading sideways. I mean, we go to this candle right here on May 10th, and it was at 350, and it's at 350 right now. So it's been kind of just hanging out. And I think there have been a couple days since then where Dow's technically hit like all-time highs, but we've seen kind of SPY and NASDAQ continue to rip higher and Dow just hang out. So I definitely like that, Joe, like a good, just basically betting that the Dow is going to catch up to the SPY and NASDAQ.
Yeah, and then right now, if you go to the IWM, that's been in a pretty sideways consolidation for the entire year. So
wait, hold on. Manager in the chat saying, how is it sideways? It's not. It's slow upwards. This is slow upwards, yes. But I'm talking about just from here, from May 10th to now, it's just trading sideways in this range. Sure, it's gone up and down since then, but 350 back in May, 350 now. So that's what I'm looking at when I'm talking about trading sideways, just in this one little past 3 months. 2 months.
And that's the area I'm referring to as well.
Yep.
But then when you look at the IWM, it's it gets up like in January into this consolidation channel quite a bit there and makes these new highs, and then it comes back down, almost hits that level in earlier in the year, but it's making higher lows up until we had that panic sell off on the 19th. That's made every stock go down, but it's looking like it's just getting ready to make another move higher. The IWM and the Dow are the two that just look like they're in a consolidation sideways channel, because you've had the SPY and the Qs kind of have some pretty good moves over the past couple of months.
Yeah, no, I like that a lot. I mean, definitely the IWM has been kind of disappointing that this whole summer, the past 3 months. But certainly I always like the kind of reversion back to the mean trade. So if you look at the markets as a whole and you see IWM and Dow as laggards, then you can essentially, from an educated guess standpoint, say, I expect these to grow to meet back to that mean of what the rest of the markets are doing. So I like that a lot.
Yeah. Anyway, that's just what I'm thinking. I'd love to hear other people's thoughts, though.
I mean, that looks like a hard resistance to penetrate.
Definitely, yeah. It keeps hitting this. Let's see what that level is.
So I think it's going down.
You think it's going down, Shelly?
Yeah. Plus, there is a supposed lockdown that's going to happen because of the Delta variant. So maybe it will go down.
I could see it going down to news.
Yeah, and it's got room to go down until about 205.
I think a lot of that might be rotation out of crap into good. That's what I call it. You know what I mean? All that right there, and you've seen it in the last few months. You bet on crap, you've gotten crap returns. You bet on the good, you've gotten the good returns. And I wonder if that's what a lot of that up and down is. That's what I've thought.
Definitely possible. Yeah. I mean, there's a lot of kind of not so great companies that people look at as trades. And at the end of the day, you look at the great companies, whether they be Apple, Nvidia, whatever. And it's like, oh, if I just had my money in those, then, Chris Capri, that was on Get Technical. He's with us every Monday, but I think this past Monday, he gave an anecdote from Warren Buffett, where Buffett essentially said, out of the 500 stocks that I've traded in the past 10 years or so, that only 10 of those stocks, 10 out of the 500 are powering the returns. That these 10 stocks have outperformed the market at a significant pace. The rest of them have either been small gainers, small losers, but really you just need like a couple of those big plays that give you good returns.
No, Sava broke the double bottom.
Oh, Sava did? Let's go check it
Yeah.
out. Blew through the support.
Hey, but Neil mentioned once there's no such thing as perfect technical analysis, so maybe that's a
That's true.
imperfect double bottom.
Oh no, they work until they don't.
It could still be a little double bottom. It could still
Yeah.
be,
Let me get. Okay, I see what you're saying. So here's where we were holding a few minutes ago. Kind of in the past 20 minutes or so, we've broken down below there.
Yeah.
So yeah, I mean, it could start curling back up here and still be a little imperfect double bottom. But if it continues to drop from here, then yeah, that double bottom's not forming, at least not at that level. It's not to say we can't get one further down here.
Yeah.
I got one stock. Speaking of stocks that are maybe in the verge of going up or down, I think Micron Technology is one which I have been very avidly following since it dropped from 85, and I would like to know what you guys' opinion on that.
What was the stock?
MU Micron, because AMD has been getting a lot of love. Same goes to Intel, but Micron has been just maintaining at that 77, 73 level. Maybe it has a potential run up.
Yeah, so I mean, I'm looking at just the dailies right here. We can see it's just below this previous support level it's right at it, $77. We see it back here too. But if we're looking just from here to here, we see this kind of channel downtrend. So if we see it hold this level at 77, that could be one of those like sustained bottoms that Neil talks about that he likes. And we can see it kind of bottom out right here. But until we see a trend established back upward, I mean, I personally would hang out on the sideline. I don't know if you're in this, Sanjeev.
Yeah, I am in it.
You're in it?
But I am in it from 73.
Okay, so you're still green. Was the 73 back like here, back in?
No, recently, about 2 days back, 73.20. It hit a bottom of 72.80, I think.
Okay, I see.
72.51 was the low I see on the 27th, and I'll tell you what, this looks like. Okay, it gave back all the gains it made for the year on that day.
Yeah,
so
exactly.
That's a pretty good entry in my opinion.
Yep.
Aaron, I think you should put a Fibonacci in it. Let's see if it lines up.
Yeah, great idea. Indicators.
It's in the drawing, the one on the left.
And this one?
Left one.
This one? No. Oh, over here you're saying.
Yes. The third one, there's an arrow. The pitchfork, the one beside the pitchfork.
Got it. So we just want standard fib retracement.
Yes. And draw in left. Not there. Sorry.
No, I'm sorry. I don't know how to use these tools that well. So, did someone else want to pull up their screen and do it?
Joe does it very well, right?
We'll do it if
I see. I see what she's saying. You're looking at the current high, about where the high was. It kind of bounced off that first fib level.
So,
I see what you're saying.
So do the Fibonacci from there. You're saying that previous high.
The C in Micron. Start from there.
From here.
Yeah.
All right. I got to find it again.
Alt F.
Alt F.
Up to the yeah, there.
Right here.
The candle in the D thing. The 1D.
I think she's referring to the high on April 12th of this year
Yes.
to the low of July 27th of this year.
Yeah, just put it there. Looks like it lines up.
But I think you want to drop the other way.
Drop the other.
Drop the other direction, so that it covers the future.
If you guys want, I have a fib of my own also ready to go.
Someone else is gonna have to do this. I am not familiar with these tools. I'm familiar with them. I don't know how to set them up myself.
Yeah, go on there, Hector. Do it.
Okay. How? I have no idea how to do that.
You should be able to, at the bottom of your screen, you should have share.
Oh, gotcha. All right.
Here's us trying to get technical without.
Yeah, this is what happens when Neil is gone.
Yeah.
He's gone to the dentist again, is it?
Yep. He's at the dentist. He's there with Raz and Luke.
So Pringles, are you saying Pringles? Are you looking at like about 82, a little bit below 82 is your next level if we get over 78.25? Is that what you're looking at?
My mind stopped working. I'm sorry, my mind stopped working. I'm just gonna say yes because if you see, it kind of breaches the line there. There's a resistance and a support in there that I think will line up well with the Fibonacci if it's done correctly. Aaron, I'm sorry.
You go ahead and share my screen now if you want, AB. I have.
Oh yeah.
I'm sorry, my mind stopped working. I'm scared right now.
All right. Well, here's one I made up, and so with on this fib retractment, yeah, we're seeing about 76 as being a point of support and resistance right there. That's a spot where we want to look out for right there. But what dates did you want?
I think she was talking about drawing from the top of April 12th of this year to the bottom of
April 12th of this year.
July 27th of this year. I think that's what she's referring to.
Yeah, April 12th. Okay, let me from the bottom of April 12th.
From the top of April 12th. The chat, that's fine. Look, it's like too many cooks up in here.
All right, and then to where?
July 27th.
July 27th. Oops. Where the hell? Yeah.
I'm gonna pull that up. MA.
Wait, what? Oh, sorry. Give me a second.
You're on a weekly too. I think she's going off the daily.
Shit, I thought I had the daily for 1 year's worth of data. Sorry. Now.
Anyway, just to clarify something on my question is one of the things I've been wondering about is whether will this make a hit around 80, 81 and then drop back because the volume of people back holding this around the 80 to 85 range is a lot compared to the price that is now. So what is your opinion on that? Do you understand what I'm saying?
Can we pull up volume profile in Benzinga Pro, or is that only in?
That's not something they have yet.
Yeah, they're working on it.
It's trying to get over the 200-day moving average right now, and I'd say once it does
let me throw those in here too. Let's see here.
I'd say if it can at least close over the 20 today, that's good news. You just want to see it close over the 200 on next week. But this is also kind of in a falling wedge to me, and we're getting up towards the next test of the trend. You can see from April 12th and June 30th, you could draw a trend line down through those 2 points. And if we get up to test that again, you're either going to find resistance or, depending on how the news goes, you could break through that. So
this is
to
one of
answer,
those stocks.
Yeah, there you go. The 200 EMA that Joe's talking about. We're right on it. We're almost on it. Yeah, we're right on it. Should I make this line a little bit?
Gucci, what?
that's
Pringles
that's
is a
the
good
EMA.
chip.
That's the EMA. I'm using this simple moving average.
Oh, simple. Oh, sorry, my bad.
Mhm.
But
Okay.
okay, it's also sitting right on the.
It's
200.
it blew. So the price moved over it today, and then it
Mhm.
came back down below it. That's definitely a big level of resistance right there, as you can see from the previous price action in this week and last week.
Yeah, the 77 has been a very tough point of resistance for this stock for the past, I think, 2
And you,
weeks.
so when you got in at 73, have you raised your stops since then?
Oh yes, I've been gradually raising it.
Excellent. Yeah, I think you got a great trade here. But as far as getting to 80, I don't want to just say, yeah, that's going to happen. It probably needs some kind of catalyst. They already had earnings, right?
Yeah, they already done the earnings much earlier.
Okay, so that's not going to be it. I'd say look for some news on the situation with the semiconductors and how that.
Exactly. I was hoping that it will try to piggyback on the good news of all the love that AMD is getting, but no, nothing is happening here.
Not quite. Like I said, I mean, here's the thing. Today seems like one of those days where everybody's not sure about the market situation with the Delta, with the emergence of the Delta variant, and now that's new one in Florida. So they're probably just taking some money off the table now, going into the weekend and the end of the month, because there's maybe too much uncertainty in their eyes. I'd say probably Monday's a better question for whether it's going to hit 80 or not, because I wouldn't be able to give you a good answer on that right now. It does need to get over that 200.
Anyway, speaking of the Delta variant, I think if you guys are, I give you a perspective from Asia. It's actually quite serious here, and people are, or at least in Singapore where I'm from, the protocol is we work from home unless you are from essential industries. So I will not take it too lightly because it is very easily spreading. And the interesting point to take note is that those who are vaccinated are also equally likely to get infected by the new Delta variant. So that's one thing which I'm looking very closely on how the US market is going to react to.
To the global situation, mostly.
Exactly.
And I know that there are still some countries that have not been able to get as many vaccinations to get their population under control with.
If you look at Indonesia, for example, they are not able to increase the rate of vaccination as much as the population is needing it. So even India, we don't know how. They are saying in the news that yes, they are doing a good job, but we will not know the real impact of it. I think we have to be very closely monitoring and how this is going to affect the global market. But more importantly, I have been observing that the US market is very isolated in that sense that it doesn't really react to global news. So I was wondering, how you guys look at it. Does actually what happens in Hong Kong, Southeast Asia, in the Middle East, does it affect how you look at your markets, how you look at your trades?
All right, y'all. Well, we have a replay set up right now of the Raz report with Sandy Monroe. And then after that, we've got Benzinga trivia at 3. But I had a lot of fun hanging out with y'all today, talking about different stocks. If anyone else has any other stocks they think we should check out, drop them in the chat and we'll get to them probably next week. But hey, y'all, I don't know, between, Chris, we got Joe on here, we got Hector, we got Pringles Girl, we got Sanjeev. I don't know about y'all, but I had fun. I definitely think we should do this again.
Yeah, and to answer this question,
Thanks,
I think they definitely affect the markets here, but it just depends on how. And to what degree? You'd have to ask somebody who's got a lot longer term experience than I have, like Chris or was it Jonathan? I'm sorry, I forgot some of the names. Or Johnny.
Johnny. But I think Johnny's back here. I'll bring him back on for a sec. Johnny said he had to dip out to trade.
Sorry. Yeah, I had to short AMC real quick. I know that's going to.
Awesome. Thanks, guys.
Well, I mean, you can't be. I traded both ways. You can't be mad. It just broke out of the bull flag down. It literally just did like a few minutes ago. So I'm going to be on that for a few days and then be off of it. It's not my fault.
Can I call out someone in chat right now? I want Miles Kaplan to come on with us next.
Same.
Yeah, come on.
I just need to see the person behind that avatar that always makes me laugh.
We've actually had Miles on the show before, I believe. Miles, correct me if I'm wrong, but I believe we brought Miles on Get Technical for a few minutes about 2 or 3 months ago, and he pitched. Was it Jets? Miles, let me know. I could be mistaken. It could have been a different guy.
Miles would join. Send Miles the link.
Next time. We're running out of time now, but next time, Miles, let me know, and I'll get you that. I'll get you that link in the chat. The return of Miles. See, I was right. He's been on before.
Yeah.
I'm not
all
crazy.
right. Perfect. Good. I must have missed that episode, but
yeah, he was pitching Jets.
Unfortunately, yeah.
I know. We'll get Miles back on. Don't worry, y'all. All right. Well, thank you again for joining me today. I had a lot more fun with y'all than if I were to just hang out on the stream alone. So hope all you guys have a good weekend, great weekend, and then next week we'll get back to trading.
Later, everybody. It was fun.
Bye, everybody.
Thank you.
Peace. And we do have a replay set up right now of Raz Report Sandy Monroe. If you guys want to check that out, it's on our channel. And at 3 o'clock, we'll have a special edition of Benzinga Trivia. So good way to end out the Friday.
Yay. Peace. Goodbye. Well.